The MBA Alumni Association of the University of Colombo has been a non-partisan guiding force in the wings of Sri Lanka's business development and policy formation for over 20 years. Formed in 1997, our mission is to partner into the country's social and economic development, build and promote business and cultural relationships, contribute to national education in management, and improve the professional and personal lives of our members. Consisting solely of graduates from the University of Colombo's prestigious MBA program, the association itself is an independent volunteer organization that has dedicated itself to fostering economic and social change in the country by facilitating dialogue and the exchange of ideas between government policymakers and industry stakeholders. Being self-funded, the association elects its own leadership every year and endeavors to focus on social, economic and professional issues in the country through various activities. Some of the key conferences we hold address the most pressing issues of our times, such as economic and management developments, monetary policy changes, environmental management, law and ethics, sustainability and renewable energy, public health, business growth and governance, providing neutral platforms for policy changes, and general public entrepreneurship. The MBA Alumni Association is also vested in the continuous professional, social, and cultural development of Colombo University students and devotes time to organizing seminars, events, and activities that enhance and build leadership competencies in our young professionals. We also participate in various CSR projects, and we continue to make it a priority to give back to our community in whatever way we can. And last but not least, our organization invests heavily into the development and advancement of our own members. We foster a culture of strength, success, and desire for career advancement and achievement. We strive to help our members to achieve their aspirations whilst generating prosperity and cultural harmony in all our partners. We therefore hope to garner your continued patronage and support to continue making our vision a reality. The MBA Alumni Association of the University of Colombo, to be the first choice in business governance.
Greetings and welcome all those who are joining this particular webinar, which is being hosted by the Sri Lanka Institute of Directors, SLID, SLID for convenience, the International Chamber of Commerce, the Daily FT, and the Institute of Chartered Accountants of Sri Lanka. And we have as partners the MBA Alumni Association of the University of Colombo. In fact, they are our event sponsor as well. And we have ACCA, Sipara, Ceylon Innovent, also being partners with this particular program. Now, I just like to mention that this program is being made available via the internet on several platforms. So the Facebook pages for SLID, ICCSL, and Daily FT. So you could be on any one of those platforms and following this program. Now, as I mentioned, we have as our sponsor, the MBA Alumni Association of the University of Colombo. You've already heard their very special message that was delivered to the audience. And may I mention also that this is the 31st such webinar that has been organized under the aegis of the International Chamber of Commerce, Sri Lanka. So there's a lot of that has been going on, especially during the period of the pandemic. Webinars were a wonderful tool or an avenue to be able to communicate with an international community. And that's an important word I just used. This webinar that we are now hosting today is being seen and heard in different parts of the globe, in as much as some of our panelists are also from different parts of the globe. But we do know that there is an audience that will be eager to know what this subject matter will bring to them. Well, one adjective that one hears quite a lot, perhaps a bit too often in this time, and that has to do with Sri Lanka, is the word worst. That's a horrible adjective, but that's being heard quite a bit. And that has an impact on the mind and the mindset of people, especially those in this country and those who are looking most interestedly at what is going on here. So that's a kind of an odd word that we hear, and perhaps we can make sense of that under the theme that we have, funding options for Sri Lanka in its worst financial crisis. Well, 75 years ago, when moving out or moving from under British rule, there was eager expectation among the people of this country. That definitely does not hold today. And we also note in the period far back as the 1950s and onward, there was a system of governance that was poorly adapted to dealing with the realities of the post-colonial period. And there was a lot of bungling along, and there was no meeting point or confluence. Politics and ideology, governance, and prudent management of the economy. They seem to have been working at cross purposes and in different directions. And observers have made note of that. So in the mid-1950s already, IMF and World Bank were consulted to salvage the economy. And there appears to have been only just once in these 7 decades when Sri Lanka had its balance of payments reflecting favorably. Perhaps that may be true. Now, much has already been spoken about the past few years, maybe the 4, 5, 6 years. And in fact, this very topic has been taken up quite a few times during these many webinars that were hosted by ICCSL. So we are still talking about the same topic, as it were. Now, I would like to draw everyone's attention to a very recent opinion delivered by the governor of the Central Bank of Sri Lanka, Dr. Talal Weerakkody, during a media presentation which was hosted by one of the chambers. And this is what he had to declare. It's a short one. Please pay him heed.
I would expect the even growth this year will end up contracting about close to 7% compared to 8.7% that IMF predicted, and some others had even more negative contraction. Because we see some gradual recovery of the activities as a result of the policies that we implemented so far. The worst is, in my view, is over, and we are seeing some bottoming out of the economy in terms of growth, and also in terms of inflation. Disinflation already started. From September onwards, continuously 3 months, we are seeing the disinflation process continuous. So what are the things that we need to achieve in the immediate short term is to get the IMF funding program unlocked so that we get some relief in terms of balance of payment. So once we get that, we'll probably be able to address one part of immediate foreign exchange constraint that we all are experiencing. This is why what is first important part is to unlock some foreign exchange inflows in terms of IMF funding and other supplementary inflows, so that we can ease that part, and so that there will be a lot more availability in terms of foreign exchange for economic activities to continue under normal circumstances. For that to happen, obviously we all know is financing assurance from bilateral partner is quite crucial. This month we have made a good progress. You all know in public domain, India has already given a clear support in terms of debt restructuring. And we have made good progress in terms of both other bilateral partners, both Paris Club and China. We have a lot of progress made, and it's the process of bilateral creditors giving assurance to the IMF. It's between the creditors and the IMF. That's the first step. India has done that. We hope that other two partners, Paris Club and China also, we have a lot of communication and exchange of letters that most probably will complete soon. So that will certainly unlock the IMF funding arrangement. And the next one is to restore debt sustainability, the ability for the government to meet the size obligations on a relief basis. First assurance is from the bilateral creditors, so they will ensure they will provide Sri Lanka medium to long term relief from their side. And then we start negotiating, discussing with private commercial creditors how they can provide this relief. That is only after the IMF program is unlocked. And in the next process is to complete debt restructuring within about another 6 months' time, so that should be able to finalize all the debt exchange, debt restructuring terms with bilateral and the commercial creditors, depending on progress on negotiation, and how we can deal with the domestic debt, what kind of treatment we need to imply. That is too early for us to discuss all this, because it's a process we will start after we get financing assurance.
With the necessary unlocking on the part of the IMF, will that mean all of the problems facing Sri Lanka will be solved? Sadly, the reality is no. There will still be a great deal of stress, and unless and until funding assurances are guaranteed in the immediate short term, the dire nature of the debt situation in Sri Lanka is likely to continue. But what to do? That's what this webinar is about. What can be done? So we have two keynotes that will lay the ground for the later panel discussion. I will be happy to introduce the members of the panel a little later on, but we first have the keynote delivered by the Deputy Ambassador for Japan in Sri Lanka, who is an alumnus of the University of Tokyo and read for his master's in Regional Studies East Asia from Harvard University in the United States. He has also been a teacher, a lecturer at various universities at different times, and he served as director of the Global Issues Cooperation Division of the International Cooperation Bureau at the Ministry of Foreign Affairs of Japan. And he's held various appointments, including First Secretary at the Embassy of Japan in the US, in Washington, then Counselor at the Embassy of Japan in the People's Republic of China, and Director of Southeast Asia Economic Partnership Division. Now he's posted here in Sri Lanka, and we're very pleased to hear from a true friend of Sri Lanka and its people. Kotaro Katsuki, Deputy Ambassador for Japan. Over to you, sir.
Thank you very much for the kind introduction. I am Kotaro Katsuki, currently serving in Sri Lanka at the Embassy of Japan here. So this very important topic, I'm no economist by profession, but I'll try my best to lay the ground for this interesting discussion. So December and this month also, we have had several high-level delegates coming over from Tokyo, and they had various meetings with the government officials here. But also, we tried to show them around town, and especially like the evenings, they are always very surprised. Like all the nice restaurants are packed with people, many people moving around. So they asked us, "Is this a bankrupt country?" And, so every time they ask me that, I tell them, on the surface, everything is fine. And I explain to them what happened like New Year's Eve in Colombo, people gathering and having fun and all the fireworks. And for various reasons, I think first time in several years, people are able to, have a little bit of, time gathering and socializing with others. But that's only on the surface, I think, because right below that surface, nothing fundamental has changed. And that's why I tell them, the difficulty still lies. And that's why Japan is here trying to assist Sri Lanka. Then what are those underlying difficulties that is here? One thing is apparently, I think, the Forex reserve is extremely low, still like 1 month plus for imports. And so that is at the core of all this trouble. And then prices are extremely high. Inflation is happening for various reasons. Of course, commodity prices going up, but also since the rupee depreciated against the US dollar starkly last spring, And these things have put even more pressure for inflation. And then central bank and others have to fight this inflation. So that's why interest rates are kept very high. Policy rates, 14-15%, and then I think usual rates would go 20 to 30%. So this is extremely high. So people basically who are lending, borrowing money, be it SMEs or even big companies or even ordinary people, they are put in a very tough situation. And then also, since this country has defaulted, the ratings have plunged. So to do whatever economic activity is extremely difficult. Like we hear from our Japanese companies operating here, they can't open LCs. And then to receive money from outside, the bank guarantee, they have to provide like 100% money to receive whatever money to be sent over. So this kind of situation is still there. And so, also the economy is still very much suffering. So all these things are still here. So then the topic that we are discussing today is that how are we going to fund those resources? And there are several, I think, ways that can be done. And I'll start first from IMF. The clip, I think, has been shown, and apparently, I think a lot is going on the IMF front. So first, I'll start from there. So, as many people may know, last September, on September 1st, the Sri Lankan government came to an agreement with the IMF staff on a assistance package of $2.9 billion in the coming 48 months. And so that is there. But then to unlock that money, the IMF board needs to approve that package. And there's a prerequisite for that to happen. And that condition is that there's with commercial creditors, you need good faith. And that means you need to be negotiating. And that is happening. And then also for government creditors, there's what is called a financing assurance, which is necessary for the IMF board to consider approval of that package. And in fact, there has been a concrete movement in this regard. Just recently, this past week or so, India has issued that financing assurance. And also, earlier this week, the Paris Club, which is basically the group of developed countries, and we discuss about debt and development assistance collectively. In a meeting earlier this week, Paris Club also agreed in principle that we will issue our financing assurance within days. So that's just about to happen. So these things hopefully will lead to the IMF considering to have the board convene and then to approve this package. But as people have already mentioned in this event, even if the IMF approval by the board unlocks the money and the money starts coming in, this will basically provide a breathing space. So the first tranche, how much money, we don't know precisely, but it is said that they will be, the whole package is 2.9 billion. So it will be, part of that. But not only that, in fact, if the IMF puts in the money, the multilateral development banks, the MDBs, they will also do co-financing because Sri Lanka is servicing debt for IMF, not only IMF, but also the MDBs. So they're in a position to put in some new money. So these IMF money, together with the co-financing by the MDBs, will come in, hopefully, this spring, once this process moves forward. So that will give certain breathing space. It won't be the cure. It won't be the solution. But at least there's no other immediate source of funding that might be coming in. So that's why we are trying to expedite this process. And I think so this past week, as I just shared with you, there has been significant progress. So hopefully this will be, keep the green light to unlock the IMF money. But then there are other sources, including Japan is among them. We have been doing a lot of assistance. And during the past year, Japan alone, we have decided on assisting Sri Lanka for grant aid. Basically, it's a humanitarian aid. The amount of around $100 million US. And for grant, this is a kind of large figure, I think. To assist towards a certain country. But I think this is, our commitment to stand by Sri Lanka and do something. And in this time of difficulties, as has been mentioned, maybe the worst situation after independence. But then grant aid is okay because grant is basically giving. But then because this country has defaulted and is not servicing the debt for bilateral countries. So it's not just Japan, but every country is facing the same issue that they cannot kind of extend loans, new loans or certain loans that has been decided. The disbursement of the money is suspended because taxpayers' money, if you put in and then you don't have a guarantee that it will come, it might not come back. If you don't have a guarantee of it coming back, then that would mean that just throwing away the money. So unfortunately, this assistance from foreign countries at this moment usually will take the form of grant, and then grants. Usually, as I told you, Japan is doing 100 million US, which is, within, we decided this year. But it won't go up to billions and of the money, I think. So that's, I think, one limitation of what the governments can do at this moment. And then, apart from that, one discussion I hear, and I think it is there, there is many things going on within Sri Lanka on reforms and following up on the budget 2023 that was passed in Parliament last December. One of the things is state-owned enterprises restructuring, and there's a lot going on. But I think among what is called the low-hanging fruit for this is I think the Sri Lankan authorities are looking into listed companies and then buying the government shares of those stocks so that they can liquidate it right away and get some money. So this, I think, is also a possible source. But I mean, there is limitation also for that. I mean, it's you can do it with all the reasons to doing that. But I think the amount would be quite limited. By the pure nature of that transaction. So then I think we'll have to really think, how is this funding going to happen? And then at the end of the day, I think it will come back to a homegrown solution, by what Sri Lanka has within its hands. So, for instance, I think tourism is one industry that has been generating forex. And it seems for the year 2022 that has just ended, the final figures I hear was around 720,000 tourists coming in. And I think the earnings was up to $1.1 billion US during the year. Of course, it's significantly lower than its heights around 2018 or 19. But still, it's coming back. And then this year, it seems the target is set at 1.5 million arrivals by tourists in Sri Lanka. And hopefully, I think the revenue will go up also. So tourism definitely is one thing. And then the other is also foreign remittance. And I think we have observed the figures going down for various reasons during the past 2 years or so. But it seems this also, there is a certain trend that it's coming back. At least the figures are going up, then times were worse. So this, foreign remittance is also a very major source. And for that, the Japanese government, we have this specified skilled worker scheme, where for Sri Lanka, we have opened at this moment caretaking and then food service and also and agriculture. And so you can take certain exams here in Sri Lanka, and then if you pass, then you can earn a skilled labor in those areas in Japan. So we are working closely with the Sri Lankan authorities to kind of scale up that. But so that's one just example. But foreign remittance, I think, is very important. And then, well, major export industries in this country, and I think mostly that is garment, apparel. That's one strong one, and then also tea or rubber or coconut or cinnamon or whatever. So those, I think, there are certain primary products that Sri Lanka is renowned, and I think that is also being utilized. And I hear that also in all those industries there is an upward trend. It seems it differs industry to industry, but what I hear is that I think there are better signs these days that things will go up. But I think, but if we really look into that kind of increase in exports of those primary industries, I think there's two things that we have to bear in mind. One is that the value add has to happen more. So I think Sri Lanka has to really look into increasing the value add that will happen within the area of Sri Lanka. And secondly, the export itself. So I think you need to have a more healthy export-oriented economy that will facilitate that process and cultivate the markets outside of Sri Lanka. So these are parts of what is called a homegrown. I think later on maybe we can have a much more in-depth discussion about how this is going to work or not, and those kind of things. And then I'd like to turn a little bit to then what should we be doing to address this kind of trend, or strengthen that. And in fact, last December, the Japanese Chamber of Commerce here in Sri Lanka, together with the Sri Lankan Japan Business Council, that's under the Ceylon Chamber of Commerce, they jointly held an economic event. And what they discussed was basically structural issues like trade and investment. So that's, we have to strengthen that to really move forward on that homegrown kind of solution. And for that, I think trade side, FTA networks, and then towards a more export-oriented posture that was also discussed. And it seems the government is following up by establishing a trade negotiation office and to try to expand the networks of FTAs. And then on the investment side, well, so I think this is the tough part. And in Sri Lanka, we have 100 plus companies operating here. And they're all having difficulties. But even at this moment, those who live in Colombo, we know that there's a Marine Drive right next to the ocean, and a new Japanese hotel called Grand Bell Hotel has just opened. So in this time of difficulties, in a sense, those who are willing to take risks come here, because it's fair to say that the Sri Lankan economy is at the bottom, so it can only go up. So in a sense, there's a good way to take that risk. So, going against the tide and investing in this time of difficulties, for certain risk takers, that will work. But at the same time, what our companies are telling us is that the business environment is extremely harsh, and there needs to be some improvement to really, if Sri Lanka is really seriously looking into bringing in more investment, which I think is necessary as a source of revenue, I think business environment has to be addressed. And another issue is human capital also, because the brain drain apparently also seems to be a huge issue in Sri Lanka at this moment, and that is happening for various reasons. But I think you have to really create a kind of several things. I think one is to have a service sector which is high earning, or like more production side, more value add to attract those young and promising, talented people not to go outside, or for those who have already gone outside to, come back or to stay. So these are the kind of, structural things that we have discussed. And then so I'll try to wrap up by several kind of preliminary, kind of suggestions or ideas that I'll just throw out there so that we might have a good discussion. So business environment is extremely important. And I think transparency, that's one thing that is absolutely necessary. And it seems that in this country, like many things, like digitalization is not, it's not, in this global era, it seems it's lagging a little bit behind. So to digitalize, but also to connect the networks and also the databases, that will bring about more transparency. And I think that will give much more confidence to the investors. Then also foreseeability, stability of policy. This is also very important. Well, Japan has also, in the recent past, unfortunately, several big projects that we had been working with the Sri Lankan government were terminated or, suddenly cancelled or whatever. So this kind of sudden change of policy. And I think for that, each country must have a national strategy, I think. So if you really look into the strengths and the weaknesses that this country has, then I think apparently you should come up with some, areas that, prioritize that you would really move forward and then be consistent. So I think that kind of national strategy and the national plan really needs to be formulated. And I think now is a very good opportunity. And hopefully that will happen through coordination among the ministries. And I think in Japan, we do a lot of intergovernmental coordination. And that kind of coordination, if that will happen, I think will... well, one word that I'd like to throw out, I think, is sustainability. So when Sri Lanka tries to, do its homegrown economic revival, I think sustainability would be one thing that this country might, bear in mind. And I think this country has many things, strengths in that regard. So I would, think that that might be one good direction that you can head towards. And then a very difficult point, but I must touch upon, I think, is corruption. And well, the IMF package, it has certain requirements or whatever, but they are also very much looking into that having the system get back to normal. And I think so corruption is one aspect that is brought up. So, but I know that anti-corruption law is being drafted and it's been discussed. So, this kind of effort should really continue. And then, well, we have to get the money flowing into the official system. And well, that's the whole, why we are discussing this at this moment. And I'd like to listen to those who have the knowledge. But one thing I just want to touch upon is tax, the issue of tax, because, in these days we hear a lot about raising of tax. But in my view, I think that how you collect tax collection, in fact, is much more important. And I think there's a lot that this country can do, raising taxes, of course, to have a healthy budget, you need to do that, of course. But I mean, many things could be achieved maybe through the tax collection and making it more efficient. And so maybe there's, hope there would be some healthy discussion that will go on. And then very lastly, but we also have to bear in mind certain risks. One is global economy. So, this price is hiking. It's kind of irreversible in a sense. So I think we have to cope with that. We have to bear that in mind. The other is a geopolitical risk. And unfortunately, this war in Ukraine, with all the efforts that is we are taking, it's very hard to see that this will be solved in a very short period of time. There is a lot of effort going on. And this is exactly a geopolitical risk, I think, and this, will continue. So apart from all the, things that we are discussing within Sri Lanka has always been mindful of what is happening outside. and that and also you are competing with other countries in the region. So you can't just think about yourself. You have always to bear that factor in mind. Well, I'd like to conclude my remarks by, Japan was burnt down to ashes through a mistake. We made the wrong decision to enter a war, and we paid a huge price for that. But then, even after we were burnt down to ashes, we came back, strongly in our economy. And I think, so in any situation, if you are determined and if you are committed and if you take the right path, always economies will revive. So with that, I hope that Sri Lanka will do its best, and then we are here to help that also, and make this year of 2023 a year of economic recovery. Thank you very much.
Kotaro-san, your remarks were exceedingly positive, and we appreciate it very much that you helped us to appreciate many things, such as the value or the need of a breathing space, and also the cautionary notes that were sounded. I think they register very well with all of us. The need for consistency in policy, transparency, corruption was mentioned. Yes, indeed, that too. And importantly too, there is and there must be a homegrown solution. And we really appreciate very much the engagement that has been forthcoming from the government of Japan and yourself in particular, facilitating some of these, shall we say, conversations, making things happen, and also providing training and opportunities and so on and so forth, showing the way, that guidance that is needed to be able to develop and optimize on these homegrown solutions, and you mentioned several of them, and we'll leave that for later. The next keynote will be sounded by one who is certainly no stranger in this particular forum, Mr. Thilan Wijesinghe. He's served as a chairman of the Board of Investment of Sri Lanka some years ago in the 1990s, and is currently chairman and CEO of TW Corp Private Limited. He co-founded in a period previously, he co-founded Asia Capital PLC, which became Sri Lanka's largest investment bank and stockbroker during that time. And they executed several landmark acquisitions and IPO deals. And in 1993, Thilan co-promoted and functioned on the board of the Dublin-listed Regent Sri Lanka Fund. So he's got a background in this kind of facilitation. We'll hand over the proceedings to Thilan Wijesinghe. Thank you.
Thank you very much. Again, it's an honor to be following speech of the Deputy High Commissioner of Japan. Let me try and focus more on the granular aspects of what needs to be done. And I can just briefly go back into history when I last served in a reform-oriented government from 1996 to 2001, where we did more than a dozen privatizations and pioneered PPPs, financially closing about $1 billion of PPP transactions. And I must remind that that was done at a time of war, when we had a war risk premium attached to financing. And how are we able to do it? Because there are lessons to be learned. It is because we had a team of local private sector, public sector, international technical experts, all working hand in glove with donor-assisted funding coming wherever we had funding gaps to pay for those international technical advisors. So I wish to point out that we need a similar scenario today. We are in, as the title of the seminar says, the worst economic crisis. We need to build something that is lacking at the moment in this country, and that is confidence, because people are voting with their feet by leaving the country. And one way of building confidence is, and I'm not saying this is not happening at the moment, but we need to immediately, and I'm talking pre-IMF, assuming IMF will be shortly forthcoming, we need to have all the donors sitting around a table and be in a position to repurpose the already allocated money. Not necessarily, it's well and good to provide relief to the poor. Absolutely, it has to be done. But we need to repurpose the donor money to have at least 25, 30, 40, $50 million in order for us to hire the management and technical expertise in order to implement the reform program. And that needs to happen as we speak, because it is by having this funding available that we are able to augment and complement the lack of skills, the lack of ability to hire Sri Lankans in particular who are running away in their droves, by working with the donors to be able to acquire the required skills for us to implement a reform and restructuring program. And this is not difficult. When I took over my last public sector appointment as chairman of the PPP agency, within 6 months, I raised $26 million of technical assistance money, where I had enough and more money, actually it was 28, almost $30 million, to hire any expert, locally or internationally, to complement the local public sector team that I had assembled. Now, why that is absolutely necessary is that we need to, when the first tranche of IMF money comes in, we need to hit the ground running. We cannot afford to waste further time in finding, how many people can we hire to the PPP agency or SOE agency. There is donor assistance money already available, and using that money, we need to immediately build a pipeline of FDI projects, PPP projects, implementing the trade agreements, reforming the investment laws. We need to go back to the drawing boards as far as I'm concerned on the Port City law, for example, and creating that enabling environment so that we build confidence in private investors by executing a few transactions fairly quickly. So I'm constantly advocate, let us get the low-hanging fruit out of the way so that we can build confidence that, in fact, the reform process is well underway. Now, what are the granular level things we need to do? In my view, the time has come where we cannot think of $5, $10 million or $20 million investments. The hole that we have to plug is so far and wide. We have to do dramatic reforms and attract the largest possible deals or FDI transactions that we can potentially implement. Apart from implementing the trade agreements, which Nihal, Pitigala and others know more about, let us look at what we can do in the power sector. Green hydrogen can be tapped entirely as an export-oriented industry. We don't need to worry about the fact that the Ceylon Electricity Board is bankrupt, because at the moment, CEB cannot sign a financeable power purchase contract, renewable or otherwise. So what else can we do while the power sector reform processes go through? We can look at power sector wheeling. Yes, I was part of the committee that recommended the reforms in the power sector, and we strongly recommended that the electricity laws be amended to take power generation into outside the CEB and to look at power wheeling and green hydrogen. We can look at natural resources in our country that we can tap into, whether it is natural gas or our mineral sector. Then we need to lay the platform to tap into climate financing. There is a plethora of funds available. Again, it is not easy. It is a long and tough road to do debt to nature swaps. But the question is, are we procuring the expertise in order to move forward to tap into that money? Then finally, as far as SOEs and privatizations are concerned, my view is that today finding management talent is extremely difficult. And therefore, we have to look at bringing in outside talent into advising the government to create a core team and special transaction advisors in order to move forward. And when it comes to, I'm happy that the Deputy Ambassador talked of digitization. And I can say this with great responsibility, why digitization has not worked and why we are still struggling with our revenue collection, whether it's at inland revenue, customs or excise, because the digitization process itself is corrupt. So therefore, the digitization initiatives of this government has to be taken out of the line agencies concerned and relooked at from ground up. I can responsibly say that why we need external consultants is that we retain, in fact, McKinsey, I can mention this by name. When I was formerly with the finance ministry, looked at inland revenue and customs, and they came back and said for these reasons, the leakage from inland revenue and customs is $500 million, and they were willing to underwrite $100 million. But what did we do? Did we hire the McKinsey? No. When they put their fee proposal on the table, everybody got a shock. But if we are to move forward with progress, we need to be able to have the money and have the guts to hire the expertise. One or two people, whether it's Thilan, Wijesinghe or Dinesh, Weerakkody, cannot solve the problem that we have at hand. So on that note, I don't want to talk too much, but that is my personal view that if you are to implement reform, we need people on the ground. And when the IMF program is implemented, we need to be in a position to hit the ground running. And at the moment, I don't believe we are ready for that process.
Thank you very much, Thilan. So I think that's a notable phrase. Yeah, hit the ground running. And your recommendation that we must have, it's inevitable that we should have the requisite skills and by people who are able to deliver rather than hold office and do nothing much more than that. So yes, and also building of confidence. I guess this is a subject that's going to be discussed at some length, and more ideas will be forthcoming in the next hour or two. Now, at this juncture, I would like to pause to say thank you very much to the sponsors of this special webinar under this particular theme. And this is being sponsored by the MBA Alumni Association of the University of Colombo. In fact, this program, this webinar is made available to the public via the Facebook page of the MBA Alumni Association of the University of Colombo. Again, thanks very much. We have, as was mentioned, a panel, and they comprise Mr. Chetab Gupta, the Senior Executive Officer of the Samina Capital Investments Limited of Dubai, Mr. Rafi Rizvi, investment banker and entrepreneur, then Maninder Sabharwal, who is the founder and CEO of the Rhodium Capital Proprietary Limited, Alex Lovell, who is in Colombo, former chairman of the Union Bank in Sri Lanka, and also one who has been able to facilitate much investment coming into the country in times past. We have Talal Rafi, who is a senior global management at Deloitte, an expert member of the World Economic Forum. Then we have in Hong Kong, joining us now, Kula Sellathurai, who is the president of the Canada-Sri Lanka Business Convention. And we have a former World Bank trade economist, Dr. Nihal Pitigala. So we are delighted to be able to have all of you form the panel. And the conversation for the next hour or so will be taken up by Sujeewa, managing partner of PricewaterhouseCoopers Sri Lanka. So I'll hand over now to Sujeewa Mudalige.
Thank you, Arun. Good afternoon, everyone. And thank you for ICCSL for the invitation to be involved in this webinar today. We've had two excellent keynote addressers setting out the stage for a very lively discussion. Alex, if I may start off with you, as we all know, I mean, there's so much energy, enthusiasm as to know when we are going to sign on the dotted line with the IMF. It was to be done in December. It has got postponed, hopefully before end of March. Some say it could be even second quarter June. But as you know, I mean, it's just the first step. I mean, we need to do many more things after that. But I think it's good to, I mean, so two things we need to keep in mind is what's the next steps and where would we get the funding from? And there is some ambiguity, not proper understanding. You know, when we use these terms bilateral and multilateral fairly loosely, some of us even sometimes not really understanding. You want to, I mean, to set this tone, you want to just give in your view, what we need to be mindful of when we talk about these two sources of funding?
Yes, Sujeewa. Sujeewa, first, of course, very often when we have discussions, there's always discussion on bilateral loans and multilateral loans. And very often people mix up things and say who's a bilateral lender and who's a multilateral lender. Generally, the bilateral lender is where the facility is provided by just one lender. Say, for example, if it's Exim Bank of China, is a single lender who is giving it to the government. The multilateral lenders are a loan facility provided by more than one lender, a consortium of lenders. So with that in mind, I think before we get on to the discussion, we also should probably, within the panel members, talk about what are the challenges say, for example, the IMF staff level agreements. And as I mentioned before, the IMF solutions are very, very prescriptive. It follows a particular pattern. There is some things that the government can do and the private sector can do, and there are certain things that we cannot do. So this must be very, very clear. So we've got to act within those constraints. I have no doubt that the next stage of our growth is going to be private sector driven rather than government driven. But the government really have to, as Thilan said, facilitate the various laws. One such thing is actually the Port City Commission law, which has to be finalized and signed, and facilitate us also for BOI. There are certain things that needs to be facilitated for them to attract the $3 billion which has been provided for in the government budget. So these are the initial thoughts, and maybe as we go along, I will probably explain further, because there are certain things that I will highlight, and then we can find solutions as we go along. Yeah.
Thank you, Alex. That's really useful. Kula, I'm going to come to you. I know you're on the move and we don't want to lose you out, so maybe I'll get you on give your views. How do you think, when you look at from overseas the opportunities in Sri Lanka, and also how do you think at the moment the diaspora is looking at opportunities here in Sri Lanka?
In my personal view, I think we have a lot of opportunity there. Especially to our neighbor. If you look at India, India is a growing market. It's growing a strong economy. I think we need to utilize their portion of the economy to Sri Lanka. We being the nice brother or nice friend of India at this time, we should utilize. How we can do it is, see, example, tourism alone. I took a small statistics. India's arrival last year, 6.33 million people came in 2022. Out of that, 273,000 Sri Lankan went in there. But in the meantime, only we had 720,000 people total arrive, and 122,000 Indians came to Sri Lanka. Imagine the population of India and where we are now. In fact, in 2024-25, they're expecting about 29 million people to travel outside India, from India. And if we can capture 10%, and they're expecting them to spend about $22.9 billion in total, which is $1,448 per passenger. If we can capture 10% of that, we will generate about $4.2 billion to Sri Lanka. So this is something we need to look at it. Why are they not coming? They are all going all the way to Thailand, Malaysia, and other countries, but we are just neighbor and we have enough thing. But we don't have we have to provide them more entertainment than the Jaila sanctuary or the beaches. Indians are not looking for beaches to get brown skin, or they don't want that skin. They are looking for much more fun. Like you see in Thailand, I'm in Thailand actually. I'm in the airport now. I was here for past 10 days. Lots of Indians coming for this sea entertainment. I mean, they have this sea parasliding or whatever those sea sports. And all those things, they are very much interested, coming as families. They are entertaining themselves, eating foods. Everywhere you go to the big cities in Thailand, like Bangkok, Pattaya and all those, a lot of Indian restaurants, catering them. So we need to start doing that. How we can do it, we can bring in like foreign diaspora to invest in those areas to attract tourism. Then also we have to open up more passage, especially the ferry service. Because if somebody want to come to Jaffna or Colombo, they have to go to Chennai airport or Bangalore airport to come from all the way from South India or Central India. Rather, we need to have access for them to come from all over the point. So there's much more easier access to Sri Lanka. I think if you look at Canada and USA, about 70% of our business come from USA for Canada. But India and Sri Lanka, not even 1% is doing at this time, in my view, where India is exporting to other countries.
I think we lost his voice.
Sujit, you're on mute.
Sorry. I agree with what Kula said. If you take the 5 southern states of India, Kerala, Tamil Nadu, Karnataka, Telangana, and Andhra Pradesh, that's 500 million people. 500 million people, just imagine. You just get, 0.5% is 500,000 tourists, 1% 5 million. It's amazing, absolutely spot on. So maybe we need to, as you said, we need to just see what is it that we need to do on the infrastructure side, what should be the attractions here, how do we keep them occupied, and so on, spot on. Nihal, if I come back to you, you've traveled the world, you've seen this in many continents, you've been to Africa, you sort of have a pretty good understanding of how world trade takes place. What is it that we need to do? We've been talking about engaging ourselves, how do we connect ourselves to the global supply chains, and we've not been too successful in that. Nihal, any views on that? What we need to do for me, on a short-term basis? We don't have time, as Thilan said.
Sure, absolutely. We do have an underlying structural issue. We can talk about that in another day. That led to the predicament that we are in. But immediately, in a retail level, what I would say is this: we have collapsed markets. We need markets immediately. We need markets to service. So one way to achieve that is to all these FTAs that we are discussing. I would propose to the negotiator to think of an early harvest program that they can sort of negotiate 200 items to 300 items that we can gain traction. Then one of the biggest advantages of having an agreement with something like India is it's about FDI, that it will immediately make Sri Lanka much more attractive to FDI, the way that the agreement is defined. So when I come to these trade agreements, I would say that, from the market's perspective, that it's twofold. One is the market access, the other side is the efficiency. One of the things that has sort of cost us for a long time is this legacy of incentivizing the domestic market versus the export. As we speak now, the domestic investing or trading domestically is 60 to 70% more profitable than exporting. Again, in a small market with a demolished income, dilapidated income, that's not going to sustain. We need scale. So I would, in very short, encourage to come up with these short projects. Third thing I would say is simply that Thilan has alluded to. If you simply take the incentive structure at the border, we import about 20 billion. Am I right? And then our tariff rates, if you take the customs duty and the para tariffs, and if we average it up simple, McKinsey would have done it detail, we ought to be collecting about $1 billion, but we have only collected 399. If you extrapolated that, we're talking about 5 billion over a period of 5-6 years. There's a lot of black money circulating. And I can go into detail. So simply structural issue on one side, immediate market, access to market with friendly countries, with neighbors, so that we can start, looking for more. But you can still sort of think of a more comprehensive agreement, such as with India, that I said that agreements with large countries is more than trade itself. It's about services, it's about efficiency, and then it's about, generating FDI. That's the bottom line. Back to you. Thank you.
Nihal, I have a follow-up question. As you know, we simply don't trade with our neighbors. And as a geopolitical bloc, this SAARC organization, to be honestly, it has been, for me, a complete disaster, for the last, say, maybe 2 decades from it was formed. What do you think that we need to do in the short to medium term to get access to, Bangladesh, Pakistan, India, and the other SAARC countries?
Well, if you look at the numbers and the scenarios, you may not be able to get a great deal of traction, but we are in a very unusual circumstance. So any agreement at this stage, I would say there's somebody who's going to benefit down in the village, down who are connected to the system, who can get stuff onto the port. So SAARC, unfortunately, I can't foresee a situation, a unified large market that we can reinvigorate. If we can, fine. I mean, that's a diplomatic challenge. But I think immediately I would encourage them to look at more bilaterally, more like an early harvest. Let's talk immediately, not spending 2-3 years down the road for a comprehensive agreement, which we will do anyway. That is necessary, particularly if we talk with India. For example, the services are the largest gain. We need to be open to basically the four modes. We are running out of the brain drain and also the services. You're running out of people for construction, various other trades. I would even say in some of the skill categories, each individual skill. I'm a great example, being in the US for 25 years, how much I may have contributed to the US economy. And there are spillover effects. So you need to be much more open with India with respect to the services sector across the board. And also we are running out of choices because we are running out of skill across the board. So we need to be very proactive and much more open and much more innovative. I hope that answers your questions.
Yes, thank you. But just for the information of the viewers, I mean, there are 3 trade agreements currently being negotiated by the Sri Lankan government. And I know delegations from Thailand, Thailand, Singapore, and India, I believe, the 3 agreements currently being negotiated. Hopefully, President Wijesinghe, who is very keen on sort of pushing these ones through, has given a deadline of end of the year, but I'm not sure whether we have the capability to negotiate 3 agreements within a period of 12 months, but I wish them the best of luck because I believe that's the way to go. Thank you, Nihal. Chetan, if I come back to you, you've been sort of an investor in Colombo for some time. You know the markets pretty well here in Colombo. How do you see, I mean, some of the multiples are extremely attractive, especially some sectors are going sort of below book, many sectors going below book and extremely attractive valuations. How do you see sort of overseas from wealth funds to private funds and sort of sovereign funds looking at Colombo at the moment?
Sure. Hi, Sujeewa. So look, as you know, we've been long-standing believers in the Sri Lanka story. We continue to believe that it will work its way through the challenges. Just a word of caution from everything that I've heard from all of the previous speakers. We're much more cautious. We're much more careful, and we believe that this is not going to be a 1-2 quarter recovery plan. I don't think anybody should expect that. I think it's unfair to load all of the burden on a sudden switch that the IMF will come and some magic genie will appear. It's not going to work like that. And I think that the most important aspect of this is to have very strong leadership and cohesive will to move towards a change. Because, you know, these are difficult times. You will have to carry people through difficult situations. And they have to believe that the light at the end of the tunnel is worth the difficulty, right? And to me, that is extremely important. It's not going to come out of, you know, pardon me for saying this, by spending 200 million on an Independence Day program. You know, these are not, that's important. I understand and I appreciate where that's coming from, but that's not the solution, right? And it's not going to help with the solution, right? So you know, of course, valuations are cheap. As you and I both know, there is significant interest, both from the private sector as well as the public sector, and especially some of the areas mentioned earlier, tourism, renewable energy, so on and so forth. I can tell you that the numbers that are being discussed, you know, whether you take 3 billion, 5 billion, 10 billion, these are essentially rounding errors for some of the large conglomerates that work in these regions today, right? So, I don't think that the quantum of money is difficult. I think the messaging has to come from top down, that they are sincere and honest about using this opportunity for genuine change. So let this be let's say for equivalence, 1991 of India, and not necessarily something else, which is, helps you with a long-term, medium-term recovery plan. And in the short term, I actually think that the most important thing that you can do to facilitate and help yourself in this process is by focusing on areas which still have strength. And those are limited in number, but they are very, very, strong, right? So for example, someone mentioned about, I think Kula mentioned about tourism, and that's true. But the tourism, Sujeewa, is not only going to come out of South India, right? If you take similar numbers, there is a percentage of South Indians who live in the Gulf, and they have much higher propensity to consume. And even if 1/3 the numbers that any of you have mentioned travel from here to there, their propensity to consume will be greater. So you have to be intelligent about what you're attracting and not just attracting the numbers, right? I think there's a fallacy to say that, look, X number came in the first 15 days versus the previous 15 days, and that works, right? But it's important that the composition is right. So that kind of thought process will not happen individually. It has to happen collectively. And in our view, it has to happen with people who have faith and belief like us, who want to build for the medium term. And I can tell you and reassure everybody on the call that there is enough and more interest to do that, but the will has to come from within Sri Lanka. And I think that's the first starting point. So I'll pause there and maybe come back later.
Thank you, Chair. I fully agree with you. I mean, that's the kind of system change that people are demanding for. As you said, it needs to be genuine, and then we need to build that trust and confidence. Talal, if I take sort of a extension from that, what is, if I'm ask you, say, in your top 5 picks, what are the the difficult reforms that we need to do to make sure that investors like Chetan will or any other large-scale investor would see Sri Lanka as an attractive destination? What would be your top 5 picks?
Yes, thank you, Sujeewa, for the question. What I would say is, first of all, let me talk about the IMF program. A lot of people criticize it as tough or something, but what I say is what the IMF says is pretty obvious. If from the day of independence, if we had followed what the IMF is prescribing right now, we wouldn't even have a crisis like fiscal consolidation or proper taxation, high tax revenue, and SOE reforms. And so what we find is that one of the most main things I would start off with is, we have a very consistently high fiscal deficits. Even a primary budget surplus was fully achieved 4 times. So one reason is that's because when you compare to the rest of the region, we have had a single digit but steady inflation rate when you compare to other countries in South Asia for decades. So starting off, one thing would be a more independent central bank that can set monetary policy independent of the fiscal side. So not just about putting the interest rates, but also coming to the help of the government. So when they know that there is a backup, the finance ministry usually tends to be a bit undisciplined when it comes to fiscal deficits. So that would be one key thing, because research shows that countries where central banks are independent have recorded low inflation. So second thing would be SOE reforms. I mean, this is going to be very tough, but it's something that has to be done. Because last year, I think 86% of government revenue was going to paying salaries and pensions. This is extremely unsustainable, and no investor is going to come in knowing that this is going to be the case, because there's going to be consistently high inflation rates if the government is spending much more than it's receiving. And also, when so much of money is being spent on running SOEs and paying salaries and pensions for a bloated public service, there is very little for education or health. I mean, we only produce 4,000 STEM graduates. I mean, 5,000, but 1,000 leave every year. So I'm also on the operation committee of Morocco University, so trying to change that as well. And talking about the third thing would be tax. One thing is not just we have one of the lowest tax to GDP ratios in the world, 8%. I mean, it was 12%, but after the previous president, he brought it down to 8%. And it's not just about taxing. I mean, 75% of taxes come from indirect taxes. So it's just the poor person who is paying taxes for the subsidies that are going for a Land Cruiser or a Mercedes here in Colombo. So it's sort of like we need to focus more on widening the tax net, because it's just unfair on certain very few number of people who are paying taxes. The government consistently again and again asks them to pay more. So we need to widen that and also lessen the burden on indirect taxes. Another thing that is quite tough, this will have to come as a long-term result, I would say, is developing entrepreneurship, because there's two ways to grow an economy. One is expanding companies that are already existing, their operations. The other thing is bringing in new businesses. So we need to create more Dhamika Pereiras, more Harijayawadinas, because they create jobs. Because when it comes to formal entrepreneurs, only 1% of Sri Lankans are entrepreneurs. Bangladesh, it's 12%. Vietnam, Thailand, 20%. So there is a culture of risk averseness. People tend to prefer to do a government job, if not in the private sector, rather than take the risk and start their own business. So these are some of the things. And lastly, I would go with free trade agreements, because there's something like it's the age of like producing something on our own is gone. I mean, even China, for example, imports components from 43 different countries to make an iPhone. So we need to tap into global supply chains. And lastly, a greener economy. That would be something that's, going with the flow. I mean, I've written a paper for the IMF on this. So we can gain access to markets with the EU taxonomy laws and others. We would need these to for our products to be able to get in. Plus, we can get energy security. Renewable energy is always coming mostly from within our borders. So we are safe from fluctuating oil prices and gas prices. Thanks.
Right. Thanks, Talal. Maninder, for you, when you look at this region, there are, many places for you to invest. There are very attractive destinations, very attractive propositions out there. What would make you look at Colombo?
So maybe let me start with my experience in Sri Lanka till date. Over the last 5 years, I've been associated and invested in LOLC. And our firm has invested and raised close to $1.5 billion for LOLC in helping them build their microfinance business, which today has become probably one of Sri Lanka's largest companies. And as you've seen the growth of the business, it employs close to 5,000 more people than it did 6 years back. It's present in more than 25 countries. And successes like this, I think Sri Lanka doesn't celebrate, right? To me, I see Sri Lanka as two Sri Lankas from a private equity perspective, a rupee-denominated Sri Lanka, which is suffering from extremely high cost of capital, which eventually it will succumb to. And another Sri Lanka, companies like MAS, Brandix, Haley's, and multiples of them, which do in excess of $100 million in EBITDA or more. And these stories are not paraded globally. So the private equity industry doesn't know that there is a Sri Lanka out there, which collectively, even just these 15 companies, which I know, do close to $1 billion cumulatively in profitability. So I think these companies will continually drive Sri Lanka, being optimistic on Sri Lanka. But at the same time, I feel that the rupee-denominated piece may or may not add up in the short term, right? We have recently raised a $100 million commitment for Sri Lanka under a fund platform called +94 Opportunities Fund. And guess where most of the LP commitments have come from? They're actually Sri Lankan family offices sitting outside Sri Lanka. So the non-resident Sri Lanka diaspora is extremely wealthy. The family sitting in Singapore, Australia, UK, they are extremely happy to chip in and invest money. They have emotional relationship with Sri Lanka. They understand Sri Lankan DNA. We have been able to raise money. I'm a non-Sri Lankan who has been able to raise money so quickly for investing in specifically two types of companies in Sri Lanka. Companies which are primarily dollar denominated and or companies which primarily focus on India, right? Which eventually could be buyout targets for India, or Indians can use them as a backyard to build those businesses more effectively in India. So I see that is a clear opportunity.
Right. Thank you, Maninder. That's very useful. Thilan, if I may come back to you, if, say hopefully we get the IMF deal done, say by second quarter, hopefully, I hope and pray that it gets done by June. I don't want to be too optimistic saying it's going to be done by March. And say we need to raise, as you know, Thilan, we need to keep raising dollars, whether it's in the form of FDIs or whether it's in the form of debt that we are going to raise, either bilateral, multilateral, and so on. If you are to raise, 3 to 4 billion every year for the next 4 to 5 years, minimum, I would say. I don't want to be saying $5 billion for the next 5 years. Let's look at about $3 billion for the next 5 years. Where would you focus on, Thilan?
Putting me in a spot. As you know, that sort of money has not come to this country even after the war ended. FDI as a percentage of GDP was less, between 0.5% to about 0.7% of GDP, when in fact 1997-98 it reached 2.5% of GDP during the days we privatized telecom. There would be a whole host of sectors. Take the port sector, for example. Why is the government building the East Terminal? Right? How much money, we all know how much money the shipping lines made over the last 3 to 4 years. Go offer it to one of the top shipping lines, they will write a check on the right terms and conditions. And I mentioned earlier, at the moment, obviously, we need to make sure that the off-taker, which is the CB, is viable in order to move ahead with the renewables program. There is about, I forget the exact technical name for it, about few billion dollars worth of low-hanging fruit in terms of converting converting some of the hydro reservoir power to be put back during times where solar is generating. There's a technical term for that. So if and when the CB restructuring goes through as recommended by the committee I served in, that will open another pipeline of FDI projects. Then I mentioned about, as I was mentioning earlier, we have to think big. And if we are to really go back to the investment pipeline that everyone talks about but never seems to materialize into Port City, we have to go back and reform that law. I call it a dog's breakfast, to be honest, with due respect for those who actually fiddled with what was a perfectly fine law that was drafted about 3 to 4 years ago with international expertise. As you know, PwC Dubai gave inputs along with ex-chairmans of Merrill Lynch and top international consultants, right? It was meant to be a special economic zone with top 25 world's ease of doing business index criteria. That was simply what it was. It was not meant to be a money laundering destination or anything of that sort. It was meant to be, for example, a satellite city to Bangalore, so that there can be a decent quality of life. Look at gaming. We were talking about tourism, and I must point out that when you mention numbers of tourism, kindly please set off the outward flow in tourism when Sri Lankans travel overseas. You have to set off the import content of tourism, which includes food and beverage, as well as the import content of what it takes to build hotels. So really, even post the war, our tourism numbers at a gross level might have been $4 billion, but at a net level is a lot lower. But if you are to really move the needle in tourism, let us look at what we can do with the 37 acres of land reserved in Port City for 2 international gaming resorts. That alone will translate to $1 billion of investment, but we have an absolutely substandard law in place. Again, these laws are drafted. I was part of a team privately where we drafted the law and gave it to a particular finance minister of the previous government. Essentially, we are not talking of quite the gold standard of a Singapore, but something close to it. So on the basis of the current gaming regulations, no blue chip company is going to put money in. So I would also put money in terms of creating the best living environment to attract entrepreneurs and IT industries and things of that sort. I mean, Port City is meant to be a dollarized environment. Why can we not, have a lower cost environment than a Bangalore or than some of the other areas? So hitting the $5 billion FDI target is not a big deal if we do PPPs properly. Why can't we have the private sector manage in the airport? Why can we not sell off the coal-fired plant for the people who gave us the loan, to build it, and essentially enter into a proper power purchase contract so that that is taken off the country's balance sheet? Why can't we sell off the ADB funded 100 megawatts of wind energy that the CEB built on the balance sheet of the country with a sovereign risk? Why would a donor lend money to build something that the private sector would do? We could securitize that and sell it off. So between SOEs, between FDI projects, as long as you know how to structure these projects and make them attractive enough for FDI investment, hitting a $3 to $5 billion transaction pipeline is not a big deal, but it requires the right people, the right policy environment, right incentives, etc. But I don't believe the BOI law and the Port City law, which are the two, and the Inland Revenue law and the Customs law are conducive to hitting those numbers.
Thank you, Thilan. Very interesting.
Sujeeva, if I may, sorry, this is Chetan. One area that actually I think, a lot can be done without a lot of change to regulation would be to look at the financial services space, both in the private banking / non-banking finance companies, as well as in the ones that are owned by the government. Some of these are well-run enterprises. Some of them are, very well run actually, and the government has stakes in them, which maybe were there, for a whole host of legacy reasons. But they're really not involved in either running of those operations or involved in any kind of strategic help to those enterprises. And actually, I think that would be a great signal also to international investors that, this is our intent. We understand that some of the other things might take a little more of a medium-term perspective, but they're not even low-hanging fruits. They are fruits that, you've kept in your basket and, you're not even eating them. So it's a bit like that, right? And I actually think that you need some sort of a spark to start all of this, because I think everybody understands that the solutions are there, but you need some sort of momentum to build up around them. And I think that it's important that they are large enough that they make an impact, and they are easy enough that can be impacted, right? Because otherwise it's a loop. You kind of believe that you want to change, a lot of things to make everything ideal for someone to come in. It's never going to happen. It's very difficult to do it in times like this, right? So realistic gold bars to kind of get onto. And then kind of build them up to doing some of the more challenging stuff, right? If you take on privatization of SOE and laying employees off, then good luck with that, because till today India has not been able to do it properly, right? So I mean, this is don't go for what is seemingly impossible, right? Start with the easier stuff. It'll build some momentum. It'll get some confidence back. Animal spirits, as it's called in economics, and then build from there, right? So I think it's, one has to be very, very pragmatic about this, right? More than anything else.
Correct, Chetab. I mean, if you ask me personally, I've been disappointed because it's almost now 7 or 8 months. And we haven't seen that, the signals. I mean, a couple of committees have been appointed, but very little action on the ground. So, I mean, we need to get the momentum going. You're right. We need to send the right vibes out. Got to create the hype and the momentum. And I mean, unfortunately, we've already lost, 7, 8 months on this. Hopefully, we'll get our act together soon. Yes, agree. Your Excellency, if I come back to you, from a Japanese perspective, I mean, Japan has been a long-standing friend. We have very close relationships historically with Japan on sort of a cultural perspective, from business to, in the political front as well. Any specific areas do you think the Japanese investors would be interested? I mean, if I may ask you things like, green bonds, things like debt for nature, any, sort of new instruments that may come through, with emphasis on the ESG. Do you think that would be an area where Japanese companies would be interested in?
Thank you, Sujeewa, for that great question. Well, firstly, I think before that financing part, I think in the real economy side, there's certain interest, I think, in the renewable energy sector. And we have, late last year, we signed a joint credit mechanism. And basically, it's to attract the Japanese companies with the technology to invest in the renewable energy sector in Sri Lanka. And then whatever carbon, reduction, the credit can be shared between the entities, the Japanese and its partnering Sri Lankan entity. So we've set that up, and I think there's a kind of ample kind of appetite in that direction. And then, yes, I mean, in Japan also, yes, ESG or impact investing, these kind of things are getting much more attention. And I'm not sure how much that would go towards Sri Lanka per se. But there is a growing appetite, I think. So, well, green bonds, I'm not sure, how much regarding Sri Lanka and what kind of, schemes that Sri Lanka is coming up with. I don't have enough knowledge at hand, but the whole area itself, I think, is growing. I used to deal with the sustainability movement in Japan. And I think one of the specific areas that I was working on at that time was to really do a lot on the upstream of that movement, and so yes, our Japanese companies and financial institutions, also like GPIF, they basically invest using our pension money. So those players are very much into that area. So if we if Sri Lanka can set a very convincing narrative and then show what's in the toolbox, then then potentially that might be one area that could be explored.
Thank you, Your Excellency. Alex, if I may come back to you, and I want to put you in a spot. As you know, our friend Dinesh is chairman of BOI. If I may ask you, what would be your advice? I mean, Alex, our FDI numbers over the last 40 years since the GCEC in 1976 have been extremely disappointing. And I was told it's only $20 billion in 45 years. $20 billion in 45 years, right? Extremely disappointing. And Dinesh has a hell of a task, if you ask me. What would be what would be your right? What would be your three things that you would tell Dinesh, saying, look, let's shake the place up, let's make it attractive. What would be the top three for you?
The good thing is, let me just park that for a moment and just give you a little bit of background, Sujeewa. You see, if you look at the current scenario, our cash expenditure by the governments, including interest expenses, about 180 billion. Okay, and our revenue in terms of taxation and other things is about 150 billion a month. So we have a deficit of 30 billion, which is building up every month. Okay. So what we are trying to do with the taxation reforms is basically to fill in that gap. Okay. Now, so it's day by day, it's becoming difficult. So where do you go to? You go to the taxation reform, that's the lowest hanging thing, and to look at the sale of SOEs, right? And also, probably one of the things we also have to bear in mind is that the IMF facility is only 2.9 billion over 4 years. And there's only going to be about 300 million or 400 million, which is going to flow in every 6 months or a year. And those monies that come in, let's get this very clear, that it is going to go into very specific programs. It's not money to spend. Okay, and monies are going to be channeled into very, very specific areas.
Yeah, so, and also be reserves. Alex.
Yes, that's right. So we have to go and find money for growth. What do we do? So when you really look at the lowest hanging fruit is, I think, is the Port City Commission. I think once we reform the Act, from the sale proceeds, we should be able to raise about $1 billion or $1.5 billion. And as part of the negotiations with the IMF, now we are taxing export companies, which is rather than they plowing the money, because this I've actually raised it with Dinesh before, that the relationship between the China-US relationship is, what do I say, is going into sort of a cold area. So most of the US and the European companies are looking to invest elsewhere. Okay, so if we are to do FDI, we should target certain things. And I raised with Dinesh also last time about the iPhone. The iPhone, 25% of iPhone production is now going to be done in India. Given an opportunity, I think if we can do at least part of the work here, and because then I said our laws in terms of importing components is very attractive compared to India. Okay, so these are things that we should look at in terms of raising money to the FDIs to flow in for us to get back to growth. The other thing is the SOEs. We talked about SOEs, I think, for the last 9 months about SOE reforms, etc. I take Sri Lankan Airlines as a classic example, and also Air India. Air India suffered or had the same issues that Sri Lankan Airlines is having: excess staff, high lease payments, etc. So you really have, if you want to sell the SOEs, you've got to dress up the bride. Even be it Bank of Ceylon, be it Insurance Corporation, you've got to dress up the bride. So for you to dress up the bride, it's going to take another 9 months or 10 months. Now, the lowest hanging fruit, I would think, would be Sri Lankan Airlines, because they have 3 highly profitable subsidiaries, which is the ground handling, the catering, and their engineering services. You sell 49% of each of those subsidiaries, you should be able to raise nearly $1 billion, and that could be easily pay off the debts that Sri Lankan Airlines have. Now, I would think Sri Lankan Airlines is profitable. So the government still can own the asset if they want to at 51% and sell 49%. I was told that for you to enjoy the fifth freedom, the government has to own a majority. So these are things that needs to be addressed and done now. If not, what will happen is we got to depend on more taxation revenues for us to fill in the gap. And day by day, the situation will get even deteriorated further. So even for us to look at private credit, what they say is, look at your country's on default status. And when you really look at the contracting of the economy, it was 8% last year. Although we are projecting 4%, I personally think it's going to be slightly higher. So where does it end? Even if you look at the interest commitment, we don't even, when you look at the graph, we won't even move it until 2032. So these are very complicated issues, Sujeewa. I think we need to address it much more seriously, and also get a certain reprieve from the IMF, especially the taxation of the export industry, because they are really our backbone. That's all what we have to. We are not a resource-based country, right? So we have to address those issues and actually bring in the money as soon as possible. So thank you. So just a quick one, maybe don't fall off from your chair, Alex. I'll just tell you the January income and the January expenditure for the government of Sri Lanka, as mentioned by Minister Siambalapitiya about a week ago. The income is right, what you said is 150 billion. With interest payments and everything else comes into play, it's 600 billion for the month. So our deficit in total is 450 billion, because the budget expenditure for 2023 is about 7 trillion. So if you divide 7 trillion by 12, it comes to about 600 billion a month. So that's what it is. So that's what the minister said. And he said, that's where we are. People need to understand. So as I said, don't fall off from your chair, right? So it's a huge, huge deficit. And as you said, and as all the other panelists have said, there's a lot to be done.
One other thing is, I know, I don't want to get into the debate here whether we should break up Sri Lankan or whether we should sell as a whole. I know Thilan has very strong views on that. I'm not going to get Thilan to comment on this because we can talk about it for the next 2 hours. Kula, I want to catch you. I know you because you're on the move. Kula, I know you touched on the tourism side. I'm coming back to this question again on we need to, I know there's a lot of discussion, hopefully, on the 13th Amendment. Hopefully, we'll see some, President Wijesinghe is really keen to work on this. There's an all-party conference yesterday. Any specific areas where, diaspora would be keen to invest if the circumstances change and becomes really attractive for them to come and invest here? Even I know we have not been able to do this for the last so many years, even though it's 14 years after the end of the conflict, and I think we've missed out 14 years in my view. Anything specific we need to do, Kula?
Yeah, sure. First of all, let me tell you this banking situation. I personally wanted to bring in $1 million for a UDA project. That's the reason I came to Colombo to sign the bank account opening and everything. Still, I'm unable to open the bank account for the inward remittance account for the documentation and everything. Now they are asking me about Canadian documentation, Canadian banking system. I don't know why they want all those documents just to open a bank. The FinTrack will definitely look at my Canadian side when I send the money via transfer or whatever it is. But the banks here in Sri Lanka have to be reformed to accept faster inward and remittance to come in, and also to open.
Yeah, I think Bilas Kula, he's on the move, and maybe we'll try to get him back again. Nihal, if I come back to you, about a month ago, we had the former Georgian finance minister here, and I think Dinesh, myself, and maybe Thilan, a few of us met up with him. And one of the things that they did was reforms in the customs, because in Georgia, after the breakaway, they thought that was one of the most corrupt places. And but he said, he became finance minister when he was 34. He said that was the easiest place to do it because, and they simplified the system. Nihal, I just want to ask from you whether it's something possible in Sri Lanka. They just had a single ban. Whatever you bring, it's just to say a single ban. Do you think to simplify the system here, if we have, for the essentials, a lower rate and everything else, 30%, 40% duty, you think that's so that we simplify these HS codes and all these things? Is that something that we can do as a short-term reform, and also to climb up in the ease of doing business?
Absolutely, spot on. I think there are several scenarios that we can think of. Certainly, my argument is the system as we have it is hugely complex, because over time, what has happened is what was a simplified framework was added on with additional tariff. That is a different story. On top of that, you have these hundreds and hundreds of exceptions built into the existing structure. So it's a complete mess. There's a top-down approach that can be done. I certainly think that I would argue that we don't have to wait for 5 years to refine it, because when you go to talk to FTA partners, they're simply asking, you have a complex system and we can't make head or tail of that system in order to negotiate. So 3 things ought to happen. First, we got to think of reforming the system. HE's plan to do away with the para-tariffs for 5 years is a great plan. And then he has declared it. You can at least start doing some of those reforms towards more unification over time. And I would argue by doing that, Sujeewa, you would get more revenue than what you have. I simply do a Rafi curve to somebody today to explain that the way the tariff system is done, you're actually losing the revenue, the way it's done. you can generate revenue by basically simplifying it over time. Second is the administration. Over the past year and a half, the previous DG and some of, two smart people have gone into long rooms, have come up with a reform program. And it's on the table now for the last 9 months. You simply got to start a way to do both of these. You cannot do FTAs without somehow trying to grapple with the existing complex, convoluted system that you have to start somewhere immediately. And you can't do that if the administration is not up to the pace. So these two have to happen simultaneously, immediately. There's a plan already on table. And then we start negotiating with our partners in a way that we can sort of prioritize things. I mean, I didn't answer your question directly, but one thing I wanted to say in case if I don't get time, Thilan would certainly confirm this. We have sort of, in some cases, with the Productivity Commission, some of the other measures that has been proposed already on the table. We just have to get on with it. We just have to start doing it. So just the customs reform plan is already on the table. Start implementing it. That's it. Thank you.
Thank you, Nihal. Talal, just to get your views on this. In your view, any new instruments do you think where we can look at other than the traditional, we are always talking about, it's remittances, tourism, the FDIs, how do we bridge the gap, and so on. What is it, if you have to think out of the box, any one or two new instruments that we can look at, which will be sort of looked at positively by the global investors?
Yes, thank you. So one area, if you're going to look outside, I heard somebody mentioning about green finance. So that would be a very positive step to go in because there is great potential. I mean, according to a study, $9.2 trillion a year are needed for the next 30 years till 2050 of investments. That's a lot of money. That's going to be have to be invested every year. So as the years go by and climate, I mean, we saw how the floodings affected Pakistan. There's going to be a lot of pressure on people to start changing. Governments are changing. Governments from the UK and others already have legal binding commitments to net zero. So green finance, that would be a huge potential. I mean, we also have the buy-in from investors. I mean, according to a study, we find that 85% of investors, look at ESG. And also 75% of sovereign wealth funds have ESG policies in them. And this is something that, Sri Lanka can look into. I mean, look at one area is solar. We have plenty. And wind offshore. According to a recent World Bank report, which shows that from offshore wind alone, we can meet more than our demand. So that means there is potential for exporting. I mean, southern India is one thing, but, electricity as a medium cannot be exported. So there we can do, if we have a renewable, we can even go into green hydrogen. UAE is planning to get 25% of the global hydrogen market. And they are only focusing on blue and green. But if we have excess offshore wind energy, we can go into green. And that's a very lucrative export to have. And the other thing is, of course, one area is, for example, I co-chair the Global Plastic Innovation Network Action Group, the World Economic Forum. So we're focusing on plastic pollution. So recycling is going to be another huge industry, $47 billion by 2026. So these are certain areas where we can focus on. And as I mentioned before, there is interest from the consumers and it also provides with energy security.
Thank you, Talal. That's really useful. Maninder, I want to to get back to some interesting point what you made is that, we have some companies here, most of them family owned, who have make their mark globally. And you're right, we have not really showcased them. And, there could be different types of wealth funds who may be interested in investing in their growth strategy, taking them global and so on. I think that's a really interesting point. You want to just expand on that, Maninder? Because that's something that we need to work on, I believe. Sorry, Maninder, you're on mute.
No, thanks, Sujeewa. See, my view is that non-resident Sri Lanka is a very important diaspora from an alternate capital raise strategy, which, taking a cue from India, and as Kula highlighted earlier, the Indian tourism numbers and all other aspects of India, I don't think Sri Lankans have ever appreciated how much Indians actually love Sri Lanka. Vis-a-vis its neighborhoods, Pakistan, Bangladesh, Nepal, Bhutan, Indians have a subconsciously utmost love for Sri Lanka, which has not materialized in access to capital markets, access to debt markets. Those numbers don't show up, right? How many Sri Lankan companies end up being in India? What is the value of M&A Indian companies actually acquire Sri Lankan companies? Those numbers are abysmally low, right? And I think that's a gap we have to address. When I went out raising this money last year at the back of our success in LOLC, it was so easy for me to raise commitment from extremely wealthy Sri Lankan families which live in the region, where they gave me a message. They said, listen, we rather invest through a fund structure, but we don't want our name to show up. We don't want to be high profile in Sri Lanka. We want to play low profile in Sri Lanka. So they love Sri Lanka at the same time. They don't want to be in the limelight. Whether it's a media play, a political play, I don't know. But this is a common message from extremely wealthy families, and I'm sure you know who I'm talking about. And some of them are Sri Lankan families, such wealthy families, right? They single-handedly can bail out half the problem, right? Like I met a family originally hailed from Jaffna, and they're happy to give a massive commitment focused on a specific region or focused on a specific sector. And the knowledge level of some of these Sri Lankan companies is phenomenal, right? Whether it's palm oil or alcohol or so many industries Sri Lankans compete in, they compete neck on neck, right? So I think the non-resident Sri Lankan diaspora is something not to be ignored, right? Alex himself is chairman of one of the companies, which actually is one of the biggest successes Sri Lanka has. It's a company called Health Recon. Alex heads up that company. That company literally out of less than $1 million of capital in 2016, today contributes $35 million in EBITDA, employs more than 1,400 people in Sri Lanka, 100% revenue is dollarized sitting in Singapore, right? So your top 10 families won't even know that such a company actually exists in Sri Lanka. That's one of the largest employers sitting in Sri Lanka today. So I think, coming back to, and again, I take a cue from Alex's view earlier, I think the corporate sector is the biggest torchlight in rescuing Sri Lanka from where it is, because whether it's IMF, privatization, and all other consultants put together, it'll take years for these pieces to come together. It's the private sector and these 10 or 15 families which have
Fully
the highest.
Agree with you, Maninder. Yeah. Fully agree with you. Thank you, gentlemen. I think we've had some excellent suggestions and remarks. And I'll hand it back to Arun for the next session. Arun, over to you.
Thank you, Sujeewa.
Thanks very much.
Arun, I think you're on mute, Arun.
Great, yeah. Thanks for reminding me. Yes, I thought I had unmuted myself, but that was not how it is. Yes, so thank you very much again. What I was saying is that it was marvelous to have heard so many practical points brought into the scheme of things, practical to the degree that they can be done. The point is, how soon can it be done is a matter that needs to be investigated. Now, it would be of interest to know that there have been people who have been viewing this program on the different Facebook platforms that I have already outlined, and some of them have wanted their voice heard. What I mean by that is certain questions that they would like to have the panel respond to and answer. So those have been handed over now to Dinesh Weerakkody, who is going to take this conversation forward. So Dinesh Weerakkody is a past chairman of the International Chamber of Commerce, Sri Lanka, and also is currently vice chairman of SLID, which in fact is a convener of this, a co-organizer of this webinar. So let's hear it from Dinesh, who takes it on.
Can you hear me, Arun?
Yes.
Okay.
Yes, indeed.
So good evening, everyone. And Sujeewa, thank you very much. You did a brilliant job. What I have done is I picked 10 questions from these social media channels, and I'm going to pose it to the panel and then do a closing question. So, Your Excellency, are you online?
Yes, I am.
Hi. So this is a question from an opposition MP. he wants to know what is the realistic timeline for the IMF approval.
Okay, thank you very much, Dinesh, for a very tough question, raising a tough question. So maybe my remarks, I referred a little bit of the current situation. So financing assurances, has come up from, India and then Paris Club, maybe as we speak, it's about to come out. So then, I think the debt that is, being discussed, so basically it will be about half. So the question would be, would the IMF deem that sufficient to move forward? I think that's the question, and of course, ideally, China hopefully will come on board. But what we hear that is happening during the recent past, it seems that it's not 100% they're ready to do the financing assurance. I'm not sure this, but if that is the case, then yeah, I mean it's a tough question. So it's really up to the IMF to decide. As Japan, we hope that the things will move forward because the debt restructuring itself will take much more time. That's apparent. But I mean, if the IMF gives the green light, then that will give the breathing space, and then simultaneously the debt restructuring talks, including with China, can move forward. So it's a tough question. I'm not in a position to answer because I'm not, the IMF itself. But yeah.
There's one more question.
So very soon. So hopefully very soon. Then there is a possibility that will happen very soon. But we have to see.
Okay. There's another question here. Pardon me for asking you this question. It says the letter from China fell far short of what was expected. If this did not come, will the IMF say the ball is out of the court?
So that's okay. Thank you very much. And so that's exactly what I was just alluding to. Well, I don't know enough about what China is doing, and I'm not in a position to confirm that. But I think from what is reported, there are two things. One is, for it to be a financing assurance, there needs to be a certain level of, commitment. And then secondly, basically that assurance will be issued towards the IMF. That's usually how it happens. So both in the way it is done and the kind of the content, seems to be lagging behind. So, but then as I told you, India and Paris Club together is like half. So would IMF, think that is, sufficient? So that's the real question. But of course, as the second largest shareholder within the IMF, we are also part of that decision making. So we'll approach this very positively. But I mean, yeah, it's it's very hard to answer at this moment. But we are hoping that this will bring things forward.
Okay. Just another quick question: are there any specific concerns for the Paris Club at the moment?
Not really. I mean, so as I shared with previously in my remarks, that yes, Paris Club has basically decided to issue our financing assurance. So yeah, and 60% of Paris Club debt is we own. So so collectively, I think we have had a good discussion. We've been discussing on this issue since last spring, in fact, within the Paris Club. So we've been doing quite a lot at this moment. So so we want this to bring about the green light for this whole IMF package to be unleashed. So yeah, that's how we are approaching things. Thank you.
Thank you. This is a question maybe Thilan and Alex can answer. The question says, the business environment is really harsh and unrealistic at the moment. What can we do to address this? Thilan, you like to go first?
Yes.
I think a credible, time-based reform plan that is not the sort of up-in-the-air type of things we've seen by certain officials of the past, where false hope was raised that by the end of a particular date, we would receive billions of these dollars from wherever, including the Middle East. I think what's really required is a credible strategy with a time-based plan on what is going to happen when, and also to see that there is competence at the level of the key institutions that are entrusted with the reform process, with management teams, and the required laws in place to support the implementation of it. So it's really the speed of execution is what is crucial in my view. And again, I endorse some of the views expressed about the taxation regime. Personally, I am very concerned about taxing exporters, and I'm also concerned about the taxation levels that would lead to the brain drain. But let's see how it pans out. But I mean, those would be my main point.
Thank you, Alex.
Dinesh, when you have a situation like this, the pain is lasts for a long time. So we are going on the basis that we are finding local solutions. We have also forgotten the fact that, as I mentioned before, we're part of a globe. So, for example, our main markets like the US, UK, Europe, and other places are themselves in the cusp of going into recession. If that happens, we have no choice. The pain is going to continue. So within this, how do we reform? How do we grow? How do we come out of this? Actually, sometimes we wait for a miracle to happen, I think. So it is tough. It's going to be extremely tough for us to come out of this. It's a painful path. But on the other hand, our only hope is actually the institutions and reforming of SOEs. We collect short-term money to fix the issues, because I think now it's a very good time for us to seriously look at, do we want to be in, the government wants to be in business or not? And we have built some fabulous institutions, as I tell. We have built Sri Lankan Airlines, the Insurance Corporation, the Port City Commission, the banks. So these all have to go, because we are not in the running of business. We have to put these monies back into the economy for us to. So for me, I still don't see the light at the end of the day, but I presume we just have to keep kicking the ball, right? So
yeah. Thank you. Sabi, I know you are very bullish about Sri Lanka. Any advice from you?
I think I'm bullish on specific aspects of Sri Lanka, which excludes government intervention. And but I think the Sri Lanka play, of course, some of the macro risks can affect that bullishness as well. But I think the Sri Lanka story is to take Sri Lanka out rather than serving or building businesses which are insular in nature. Because I think that story does not have much legs. It's taking Sri Lanka, whether it's the biggest resource, as Alex said to me, is more human capital, taking Sri Lankans outside Sri Lanka to build businesses. Whether I think that's where the story is, right?
Yeah. Okay, thanks. Chetan, Chetan? Are you still there?
Sorry, yes, I'm still here.
Yeah. So any specific advice about what we should do to retain some of our good talent and also to bring back some of the talent?
Well, I think, Dinesh, talent is a function of opportunity, right? So, talent is a bit like capital in the sense that, it'll go to where growth is, where opportunity is, and what lies in terms of security for them, right? We've been interacting with a lot of Sri Lankan talent over the last few months, and a lot of them, completely transparently have been trying to join our teams because, we give them global exposures. However, equally, we're seeing on a very large scale, people who mention things like IT services, etc., looking at tapping into that talent pool, but under the right framework. So I think talent will be retained under the right framework. And I think that framework has to be designed within the boundaries of what is possible for Sri Lanka. right? If it's going to just keep going back and forth just from a port city perspective, then that's very insular, right? Because the country is larger, etc. Right? So I think everybody who is at it is aware of how to solve this. The question is there will to solve it? Right?
Okay, thank you. Sabi and Chetan, maybe a quick question now. What are your specific interests at the moment in the market? Who likes to go first?
So, I mean, I can give a construct of what we have formed as specific opportunities in our fund, which is called Plus 94, which are businesses which are primarily dollar denominated. Some of the live deals we are seeing is in niche manufacturing. We are seeing this in very specific industries, as well as some listed companies which are completely out of favor, but derive 70-80% of the revenue in dollar terms. Some of the financial services companies which Chetan highlighted, but businesses which can build financial services outside Sri Lanka, which is what I did with LOLC. We took LOLC out of Sri Lanka to build in a Cambodia and a Philippines. And that talent actually outshines the local talent in most of those countries. So I think I would be very bullish on building financial services companies, taking Sri Lankan talent, using Sri Lanka as a base to build in those countries, because the quality of talent is exceptionally high for financial services. Sri Lanka is very good, in fact, whether it's education system or inherent DNA, but Sri Lanka is very good in finance. That talent should be exported, benefiting Sri Lanka, which is exactly what LOC's success was. Right? Yeah.
Okay. Quick comment from you.
Just a quick one.
From my perspective, we like the themes that Maninder highlighted. Obviously, we would like to look at those companies. We're equally interested in local champions that would be very attractive for global players. So don't forget that, strategics think of opportunities like this to come once in a decade, right? And they need partners who understand who are the best local partners to bring on board. And I can tell you just from personal experience, there have been at least 10 to 12 conversations that I've had in the last 2 quarters with majors who are looking at those areas, right? I know Alex mentioned, privatization of the airports. I mean, we've been very close to the Tatas who've done the transaction on Air India, and I know how much of an effort went into that, but they kept at it, right? So again, if there's intent, there's enough and more appetite to do this.
Okay, thank you. Talal, maybe you and Nihal can take this question. Somebody wants to know what is the biggest geopolitical risk for Sri Lanka at the moment. You can go first.
You want?
Yeah.
Nihal, you want to go?
Please go ahead.
All right. Okay. Right. Okay, that's a tough one. But I think the biggest geopolitical risk, as far as I'm concerned, would be having a neutral stance towards all countries is important. I mean, obviously, Japan is our long-standing friend. China, the US and EU, our largest export basket. So, but we should be very careful with India because we are always, it's our immediate neighbor. We share a language, culture. So that would be my biggest geopolitical risk. I'm not, don't misquote me saying that we should have good relations with others, but I'm just saying, like, India is always going to be right next to us. So it's not just economic, but security-wise, everything, it's always one step ahead when it comes to India. And they're going to be involved with us, whether they like it or not, in a friendly way. And they have been very helpful to us. So that would be my biggest risk.
Right, thank you. Nihal?
I completely endorse what Talal said.
Okay. You are still not removed your World Bank hat.
No, I haven't.
Okay.
No, I think he put it very eloquently where we are and what needs to be done. The geographic and the demographics are very strong inducement for businesses in the future. The one thing I would like to say, I can near predict after looking very carefully what the World Bank and IMF and everybody has done, the trade is going to be naturally regional in the future because of the oncoming stagflation in the larger countries. Naturally, the center of gravity is going to move towards Asia. There's no doubt about it. But in terms of geostrategic and geoeconomic space, what Talal said makes a lot of sense to us.
May I comment on that question?
Yeah, go ahead.
The way I see the risk in geopolitical terms is, this is not to cast aspersions on any one country or any one government of the country. It is essential to correct any past mistakes, fiscal indiscipline coming into the picture to correct or rebalance geopolitics. Because if I were to go back to the era that I was chairman of the PPP agency, we signed many government-to-government MOUs, which, if implemented, would have bankrupted our country even further, in the name of geopolitics and regaining geopolitical balance. So it is really important that we manage our relations with obviously our great friends to the north and the east and the west, but it has to be done in a fiscally prudent manner without making the past mistakes.
Okay, thank you. Nihal, maybe you can take this question. Somebody wants to know what are the key FTAs we need ASAP to get done to help us to get out of the crisis?
Okay, wonderful. Well, we have 3 on the table right now, which is, I believe, Bangladesh, Thailand, and India. Am I correct?
Yes.
Dinesh? Yes. I think we quickly need to wrap up. What I basically would propose, Dinesh, is to look for the 5-year comprehensive FTA program, but for the immediate term, ask for what you call an early harvest. Now, technically speaking, as a trade economist, we have done this many years. We've gone to several countries have basically proposed, if you are very different from each other, more advanced technically, ideally the gains are greater technologically, but there are a lot of synergies that a country like India could bring that in to your FTAs. So you need to prioritize what you have on the table. But then I would also encourage the government to look to the East, particularly look for 2-3 additional countries. Now, singularly, purely from optimal point of efficiency, optimality, I would say go to the ASEAN Secretariat and make a pitch, but it shouldn't hinder us talking to Indonesia, for example, Thailand, and complete the Singapore agreement in a way that you can implement it.
Thank you. Talal, a quick comment from you.
Sorry, I was lost on...
on the FTAs, a quick comment from you.
Yes, FTAs, as far as I'm concerned, I think one way we can use FTAs, free trade agreements, would be as we have, for example, if you look at Sri Lanka, we are the only country in South Asia which has good relationships with all the other South Asians. Like India, Pakistan, they have issues, Bangladesh, Pakistan. So this is also a medium for us to be the connector. And there is talk of FTA with China. So we can be a sort of a medium for Indian companies to tap into other markets. So this will be something, as well as last thing I always keep emphasizing is to tap into global supply chains. That should be the way forward for us.
Yeah, thank you, Tala. Thilan and Alex can answer this question. Somebody wants to know what is your advice to the government to get the SOE privatization off the ground? Who wants to go first?
Thilan, would you like to go first or shall I go first?
Okay. It is to move rapidly on the easier transactions by appointing transaction advisors, and that would include insurance, Lanka hospitals, Sri Lankan Airlines, and do as much as possible sequentially and in parallel, as opposed to waiting for certain ideal situations to come on stream. Secondly, I still advocate that we need to bring back a law similar to the PERC law, Public Enterprise Reform Commission law, which gave teeth to the entire SOE reform and privatization process.
Okay. Alex?
See, Dinesh, I think most of the institutions have been run like public sector companies, the public sector. So the transition to be privatized and when it goes into private hands, it's a completely different mindset. So you've got to start the process right now And it's going to take about a year before you could do a successful privatizing of assets. So it's not only preparing the companies for sale, and also it needs a completely different mindset of employees. And so they need to be, what do I call, not trained, but coaxed to accept private sector practices. That transition is going to be extremely difficult. I mean, I can tell you, I was speaking to the advisors for Air India. They have a huge problem with the Air India transaction because of the transition from a public sector to one such example was that there were Air India employees who were given homes when they were in stations. But when Tata came, said, look here, we're going to take all these homes back and we are going to give you an allowance. You've got to move into your homes. Now, things like that in place like India, where you have so many states and everyone's going to lose it. So in a smaller scale, I think we have a similar issue here as well, Dinesh. So that has to be addressed as well. Yeah.
Okay. Kula, can you hear me?
Kula has left, I presume.
No, I'm here.
Still there.
Go ahead.
Yeah. Yeah.
Sorry.
So Kula, you won't like this question. Somebody saying that the diaspora keeps coming and going, but nothing really happens. But what do we really need to do to mobilize this?
I think we need to create a systematic investment opportunity for diaspora. Have to have a coordinated program. I can say that way, because now I come and open a business, then there's not working, I'm going. So we need to have a project that coordinated by the your side of the BOI and as well as our side. We can bring in like crowdfunding, equity crowdfunding. So the actual investor don't have to be on the ground to run his business, right, where he can invest the money. Like he said, we have a lot of money available at this time, but we need to have a direction towards that funding and investment. I think that's what was lacking in the past. We need to create that through OSFI or whatever you guys are talking about, the investment for Sri Lankan overseas Sri Lankan to come and invest. That has to be regulated as well as a plan, program, or organized by leaders like you.
And also, if I may add to that, Dinesh, really the tax environment is unfavorable for even NGOs and private equity to come into this country. So I have been advocating this for the last 5 to 7 years to bring limited liability partnership legislation as well as Chapter 11 legislation. So these new laws are essential to mobilize and manage capital into the country. Otherwise, it will sit offshore and it will come in dribs and drabs.
Okay. Excellency, you like to comment?
Yes, thank you very much. I mean, there's not too much to add, but I mean that investor confidence is extremely important. And we hear that everything takes so much time. You have to go to multiple places. So if Dinesh, you can, BOI can set up that one window, whatever, one stop, whatever you call it, that'd be extremely good. And, because at the end of the day, you are competing against a global market to, welcome foreign investment. And, places like Dubai, it's so easy to set up business there. So, and that's becoming the norm. So, yeah, I think there's a lot to do. And then finally, and lastly, like on the FTA, I think, it seems His Excellency, the President is, he has a vision, like at the end, he will join like RCEP, which is ASEAN 10 countries plus 5 countries, including Japan, China, Korea, Australia, and New Zealand. And so and the whole point, I think Talal-san was, mentioning several times, that this global value chain, which is being formulated, you have to be part of it, or otherwise you'll just get cut off from the rest of the world. So, there's a lot to be done, and I think there's not too much time. So, like in Japan, previously we used the U.S. pressure to open, liberalize some of the parts that we were, very protecting, and and we were using some other sources. So this, IMF process, I know politically it's very unpopular, but it's a very good chance to, it opens a window to do the necessary, and I hope that will happen in this country this time. Thank you.
Thank you. Thilan, try to answer this question in 2 minutes. The question is, what are the specific reforms we need to the BOI law and the Port City law?
Very, very simply, let me start with the Port City law and the BOI law. I think there has to be an overlap between the two laws because the unfortunately, the Port City law disapplies the BOI law. So the original version of the law that I'm not making an emotional statement here because I was co-author of a previous version of the law, which was done with international consultants' help. Because there are certain synergies between the BOI and Port City to be exploited, and that would also give the opportunity for that law to become to be evolved as a special economic zone law, which can be applied to even places like Hambantota and Trikkamalli. So why replicate resources? The second aspect is that it is fundamentally wrong to have a 40-year tax holiday written into the law itself. Matters connected to taxation should come via regulations. And thirdly, I don't think you can frame a law, which was the case in this law, to address a problem of foreign exchange shortages. So any investor, this law is quite discriminatory against local investors because local investors who do not earn dollars need to find a bank that is inside Port City under the Port City law and borrow dollars in order to even rent premises. So you cannot, just because there's a dollar shortage, frame a law because there's a crisis today, when in fact a law should be robust enough to be valid for a 25-year period. So the list sort of goes on. And of course, one final point, I mean, there is more. I don't believe any law in this country should give complete discretion to the president, however respectful I may be of the office of the president, to appoint all 7 commission members. There must be certain ex officio officials involved as board members, and I'm always for nationals and non-nationals to be on these boards, eminent persons from Sri Lanka and overseas, including looking at advisory boards. So that's as far as the Port City law is concerned. But as far as the Board of Investment law is concerned, I believe with the elimination of certain schedules, certain laws from Schedule B, particularly concerning the income tax law and the exchange control law, has hamstrung the BOI's ability, though any people could say that BOI should not be given discretion to waive and modify and exempt the application of certain taxation laws. These amendments are done in consultation with the Finance Ministry and the Finance Minister. So if anyone wants to address those concerns, make at least a Secretary to the Treasury or a Deputy Secretary to the Treasury ex officio board member of the Board of Investment. It should not be a hodgepodge of people that a minister concerned decides who should be on the BOI board. Ex officio, the BOI board must be represented, in my view, at least by 2 secretaries, and it must have a strong connection with the central bank and the Finance Ministry, and the BOI board should be a policy-making body. So those are my initial comments. I personally believe that this juncture, BOI should be given greater teeth.
Right, thank you. Sabi, can you comment on this? Sabi, are you still there?
Yeah, I'm here.
Yeah, okay. So this question says, what are some of the reforms we need to the government shareholdings? Any thoughts?
I think I completely align with Thilan's views, right? Because, you have to have third parties get involved, whether it's the best of law firms and the investment bankers. You need to have an ethical, honest approach, which is completely not run by government bodies. And that's the only thing which will lead to some results. But I strongly feel that I think the government reforms are at 2 legs, right? One is the government reforms on how government will change out. And these divestments, which could result in a $6-8 billion pool like Sri Lankan Airlines and other things Alex highlighted, this has to be done. But the question is, in terms of execution, will it be government-led or government will agree on an arm's length basis to have third parties get involved? Otherwise, this will never happen.
Thank you. Chetan, anything from your side? Okay. Nihal, can I ask you this question? Can you unmute yourself?
Yeah, sure.
Yeah. So there's a question here. Will the proposed initial international trade office be a big game changer for Sri Lanka?
I think one of the challenges we have in Sri Lanka is the lack of cohesion of having the both analytical, administrative sort of apparatus, debating, arguing, and bringing into a system where the messages and the policies and the prescriptions are passed on consistently. We had a problem during the last 4 years in particular. I think the IT office, is a solution in that context. We can bring different aspects of both, including the transparency that the Singapore Agreement was hammered for. So I think the IT office can sort of, fulfill that vacuum and do it in a coherent way. And I also think, Dinesh, that it needs to be very carefully thought out. There are several models you can look at. It should be a combination of some of the best practices. I can offhand say DFAT is an excellent example of productivity commissions in a number of countries. We also already have a productivity commission. So it's an organization that should have autonomy. Mostly it should be intellectual in the way that it should be set up. And you should try to get the best possible help. Particularly the leadership is important, and also the apparatus, how you will work through. So the design can be thought of. We can go back and forth and discuss it. I mean, I have given my thoughts already to you. But I think we shouldn't stop. As Thilan mentioned, it could be non-nationals with nationals that the ITO should be consistent of. I hope that answers your question.
Thank you. Thank you. Before I get to the last question, somebody says here we are losing 2% of our GDP because of the leakage in the customs and the tax collections. Any thought? He wants to know how we can plug that hole. Thilan, you'd like to comment?
Appoint external consultants and to basically go in there and look at everything from IT systems to systemic issues connected to the way the law is drafted to complete the reform ground up. And as I mentioned earlier, and I'm not advocating for a particular firm, I don't work for international firms. I run my own investment bank. There are international firms who are specialists in reforming Inland Revenue and customs. Bring them in. Whatever the millions of dollars it costs to bring these companies, external advisors, don't look at the cost, because the payback will be at least 1:20 or 1:30 at a minimum. Where you spend $1 on the international consultants, you'll get 100 times more additional revenue over a period of time. I know the last time this didn't go through, 4 years ago, someone went and told the former finance minister, Mangala Samaraweera, I don't mean to cast aspersion on anyone who cannot defend himself, but I was told that he was told that some of the assessors will go on strike if these reforms are implemented.
Okay. Nihal, a quick comment from you.
I think it can be done. There's some work already been initiated. I would start off, Dinesh, with what's on the table, but I also agree with Thilan that we need. The problem is the transparency with which you need to carry this out. There's going to be quite a bit of resistance. You need a strong leadership internally for that to be carried out. And it needs to have an independent resource, which is what Thilan spoke about. I fully endorse.
Okay. Thank you. Talal, a quick comment from you.
Yes, just adding on to what everyone said. One is digitizing the process. And the second thing is keeping a very uniform rate for everything. And making information out, so making it very simple. So the process is very smooth and there is no room for any corruption.
Okay, thank you. My final question is to the entire panel, whoever is left. What is the one big thing the government should do now to change the perception of the country? Talal, you like to start off?
One thing that can
change the perception.
Okay. One thing would be, for example, I would say get into a new whole focus on innovation. That would be one thing, because I didn't touch on it before, and I wrote a paper on the IMF for this. There is a huge potential that every time there is a new innovation, there is economic growth throughout history. And that was the one thing that made the West overtake China. And so I would mean like working closer with the universities and as I mentioned, working more with startups coming up with solutions and changing the whole mindset around risk averseness. So that would be one thing.
Okay.
And also, if I may add, adding more to the export basket, because from 2015, we've only added 7 products, while Vietnam added 48 products, bringing 54 billion, while our thing only grew by $100 million, while Vietnam 54 billion. So we need to focus more on those two. Thanks.
Thank you. Alex? Alex, can you hear me?
Yeah. Tourism is actually one of our lowest hanging fruits, Dinesh. And I think we are also worldwide known for being an excellent destination. So I think we should focus on that, because that's the one that's going to bring in quite a lot of revenue in the shorter term. Because our problem is to fix the problem now. We don't have the luxury of time, as Chetan said, that we cannot wait for globally. Everyone is taking positions, and we might lose out. So I think we need to focus on tourism, and of course, the government processes, the procedures, the visas, everything needs to be facilitated. Now, there's one issue everybody has raised, is that we're told that we are going to be given 180-day visa on arrival, but the system doesn't work like that. System says only 30 days, and 30 days means you can get a 180-day visa, but within 30 days, and it doesn't give you the ability to travel and come back within that 180 days. So these are some of the practical issues then.
Thank you. Nihal?
Sorry, Dinesh, I have no further thoughts to add on.
Right, thank you. Thilan?
I can suggest maybe 3 things, Alex. I must caution that in the small luxury tourism resort I'm involved in, we had the worst December of any normal year in December, simply because of the travelers' advisories. And today, the international travelers' advisories, particularly in Europe, are talking of a decline in safety of tourists from certain misdeeds if they walk on the streets, literally. So in order to correct that, we have to show that there's going to be fuel, there's going to be no electricity power cuts, that there's not going to be any economic related hardships that will result in a form of social unrest. So it's the anticipation of these problems that are causing these negative reforms. So I'm of the view that it is 1, 2, and 3, building confidence on the economy. So the things I would do is announce a time-based economic reform plan, show the world that the government is bringing in a local and international team to support the likes of Dinesh Weerakkody or Suresh Shah or Anand Koral, who and Secretary to the Treasury, etc. Because you cannot solve a once-in-a-lifetime problem without the help of bringing in a competent local and international team, and focus initially on chipping away very quickly at issues connected to ease of doing business. And there's a whole plethora of areas that I can list out, including matters connected to what was mentioned about opening a bank account. Even for people to make a charitable contribution, you should see the questions that are being asked. So those are the 2, 3 things I would do, and then when the money starts flowing in, some of these bigger transactions will happen.
Thank you, Thilan. Your Excellency, you can have the last word if you are there.
Well, thank you very much. As a foreigner, I'm not sure if I'm entitled to be answering this question. But I think one thing is, listening to the discussion, yes, I think there has to be a national policy, national strategy, I think. And I hope that would be formulated bipartisan. So, it's not the current government. I think it should be, a discussion among all the parties, and somehow come up with, a strong message, and then to implement that. So I think that would send a very clear message. Thank you.
Thank you. Thank you very much to the panel, and a big thank you from ICC. Over to Arun.
Yep, indeed. Thank you very much, all our panelists. Now, many things were proposed. There's no question about it. Many of them, most of them, if not all, were very, very practical premises that were outlined. But much will not take place. That's the sad reality. That is, until the reforms are in place. And there was much mentioned about reforms. And obviously, concurrently or parallel with the reform programs, there is need for the confidence building on the one hand, and also the negotiations will continue, whether it's IMF or the other lenders. You know, all of that will have to go on concurrently. But the reforms are needed, and the expertise to implement or be able to move that forward, I think, has also been underscored even in this last round that was mentioned, and that was good to hear. Then the Deputy Ambassador helped us to appreciate that there's much that needs to be done with regard to exports and value addition with it. And he too mentioned tourism, as did Alex Lovell, the need to be able to improve on what is on offer. We heard the cautionary notes sounded by Thilan Wijesinghe with regard to that, and that obviously entails a great deal more than only discussing things and the paperwork, but there's a lot more. And how good it was to hear Kula as well as Maninder say some things with regard to the availability, the eagerness on the part of the so-called diaspora to be able to engage with Sri Lanka and its progress. How good it was to hear that. It was almost a confirmation of things that we have perhaps had percolating in our minds for some time, but now we have the evidence that there is that interest. And Kula was saying, you know, this can be done if. It can be done if, and he mentioned what those ifs were. So we certainly would look forward to those things being done. And to borrow a phrase from the national anthem of Sri Lanka, Yamu Yamu Vi Nopama. We don't have much time. But we just like to mention that on the platforms where this webinar was conducted and made available to the public, both here in this country and overseas, what was that now? We did say the ICCSL Facebook pages have the this webinar, as did the where was that? Yeah, Daily FT. And we would like to mention that this will remain on those platforms for a little while longer. The reason I'm mentioning it is there's a likelihood that many people who wanted to hear this would not have been able to because of time factors and so on and so forth. So if you do know, and I'm mentioning this to anyone who's still with us, if you do know people who you think might benefit from listening to all of the points that were brought to bear in this webinar over these couple of hours, draw their attention to these websites, the Facebook pages, where this will remain for a little while longer. And we are grateful for the support that we have received from our sponsor, the MBA Alumni Association of the University of Colombo. In fact, their Facebook page will also have this webinar stored for later review, and people overseas will also be welcome to access that. So saying, we also have a sponsor video from MBA Alumni Association that will be brought here, but I'll use this opportunity to say thank you very much to Sujeewa, who helped us with the first part of our conversation, and certainly Dinesh Weerakkody is the latter. Thank you very much. And to each of our participants, be they keynote speakers or the panelists, a very big thank you for the commitment that was brought to bear over this time and staying all this while and sharing your thoughts without holding back. All of you, thank you so much. Well, here's the message from our sponsor.
The MBA Alumni Association of the University of Colombo has been a non-partisan guiding force in the wings of Sri Lanka's business development and policy formation for over 20 years.
Until we meet again.
Formed in
Goodbye.
1997, our mission is to partner into the country's
Thank you very
social and
much.
economic development, build and promote business and cultural relationships, contribute to national education in management, and improve the professional and personal lives of our members. Consisting solely of graduates from the University of Colombo's prestigious MBA program, the association itself is an independent volunteer organization that has dedicated itself to fostering economic and social change in the country by facilitating dialogue and the exchange of ideas between government policymakers and industry stakeholders. Being self-funded, the association elects its own leadership every year and endeavors to focus on social, economic and professional issues in the country through various activities. Some of the key conferences we hold address the most pressing issues of our times, such as economic and management developments, monetary policy changes, environmental management, law and ethics, sustainability and renewable energy, public health, business growth and governance, providing neutral platforms for policy changes, and general public entrepreneurship. The MBA Alumni Association is also vested in the continuous professional, social, and cultural development of Colombo University students and devotes time to organizing seminars, events, and activities that enhance and build leadership competencies in our young professionals. We also participate in various CSR projects, and we continue to make it a priority to give back to our community in whatever way we can. And last but not least, our organization invests heavily into the development and advancement of our own members. We foster a culture of strength, success, and desire for career advancement and achievement. We strive to help our members to achieve their aspirations whilst generating prosperity and cultural harmony in all our partners. We therefore hope to garner your continued patronage and support to continue making our vision a reality. The MBA Alumni Association of the University of Colombo, to be the first choice in business governance.
The International Chamber of Commerce Sri Lanka is the national office of the Paris-based business organization. The ICC comprises of membership of 45 million members in 130 countries. Trade facilitation, export and import and cross-border trade and issues relating to freight forwarding and many other matters of importance are addressed by the ICC. ICC Sri Lanka works through several committees to debate, discuss and suggest solutions on subjects related to the mandate of the Chamber. Each of these commissions are led by professionals in the committee, with many committees functioning. ICC includes a membership committee, International Relations Committee, Policy and Advocacy Committee, Training and Development Committee, Banking Committee. ICC is the sole authorized guaranteeing agency for ATIA CAN. It's an internationally accepted customs document which enables duty-free and tax-free temporary importation of items as commercial samples. The ATIA CAN reduces costs and red tape. The ICC is also known for its popular publications invaluable for bankers, lawyers, arbitrators and anyone involved in cross-border trade. Its members are provided with a member's privilege card which includes discounts with multiple retailers. ICC Sri Lanka's vision is to be the organization of choice to advance international trade and investment for businesses in Sri Lanka. ICC Sri Lanka's mission is to be the change agent in national policy formulation and implementation and facilitator of global businesses with Sri Lanka and disseminator of information on the development of business utilizing the services of ICC Paris while continuing to be a facilitator of dispute resolution. In addition, the ICC Sri Lanka organizes seminars, lectures, meetings with business leaders, and gives recognition to Sri Lankan businesses for outstanding achievements. ICC can play a special role in connecting business to the world and be a driving force for all Sri Lankan businesses.
If you seek for business, look for insightfulness. If you seek for politics, look for anticipation. If you value lifestyle, look for the extraordinary. If you love sports, look for the passion. Daily FT. Be empowered.
We employ several fully qualified chartered accountants and many more aspiring chartered accountants. Every one of them have contributed tremendously to the success of our group. Therefore, we can be assured that Atkins Spence will continue to grow and prosper.
I became the CEO of Lanka Tiles at the age of 30 years. Skills and knowledge I acquired as a chartered accountant gave me the confidence to take over and succeed in this position. I think this qualification helped me immensely to scale these heights. I believe a good chartered accountant can take any responsibility.